All right, now we're shifting into another really practical area of business expenses, and that is transportation and travel. At a high level, these expenses are deductible if they are ordinary, necessary, and related to the business. But the key to this section is understanding the difference between transportation and travel, because they are not the same thing. Transportation is getting from one place to another within your general work area. Travel means you're away from home overnight. That distinction drives a lot of the rules we're going to talk through. Let's start with transportation, the most common situation. There are several types of transportation costs that are deductible. For example, going from one work location to another, visiting clients or customers, attending a business meeting away from your main workplace. These are all considered business transportation, so they're deductible. Now, here's a really important rule. Commuting is not deductible. So if you're going from your home to your regular place of work, that's considered personal. Students mix this up all the time. However, there is an exception here. If you are going from home to a temporary work location, that can be deductible. And if you have a home office, then your home may actually be considered your principal place of business, which can change how these rules apply. We'll connect that idea more when we get to the home office section. Now let's talk about how we actually calculate vehicle-related deductions. So there are two methods. First is the standard mileage method. This method uses a fixed rate per mile driven for business. So your slide shows that it's 67 cents per mile. I think that is the 24 rate. And then that rate is adjusted and indexed for inflation each year. This method is simple, it's easy to track, there's less record keeping. So you're just taking the number of business miles that you incurred and you're multiplying it by the 67 cents per mile to arrive at your deduction. Now the second method is the actual expense method. So this includes your gas, insurance, repairs, depreciation. This method, although it's more accurate, it requires detailed records. And typically, actual expenses are going to result in a larger deduction, but because the mileage method is much easier, a lot more taxpayers tend to use the mileage method instead. So whichever method you decide, you've got to use one or the other. You can't use both. So you can't take a deduction for your standard mileage rate at whatever cents per mile and then also take a deduction for the cost of your insurance or gas. It's got to be one or the other. Now let's move into travel, which has different rules. For something to qualify as travel, it must require an overnight stay. Once that requirement is met, several types of expenses become deductible. Transportation, lodging, meals, incidental expenses. However, there are a few important limitations. The trip must be primarily for business. It generally should not last more than 1 year, and the expenses cannot be lavish or extravagant. So again, back to that reasonable expense that we talked about previously. If a trip includes both business and personal elements, you have to allocate your expenses among the business and personal elements. Now let's zoom in on meals because this is something that is always tested. Business meals are deductible, but they are limited to 50%. So even if the expense is valid, you're taking a client out to lunch, you're only going to get half of the deduction. You're only going to be able to deduct half of the cost of that meal, put another way. To qualify, the meal must be directly related to the business or associated with a business activity. Also important is that entertainment is not deductible anymore. So we can deduct the cost of meals at 50%, but we are no longer able to deduct the cost of entertainment. So things like if you take a client to a sporting event or a concert, that is not deductible. Even if during the concert or the sporting event business is discussed, it's not a deductible expense. There's also a per diem option when taxpayers can use a standard daily rate instead of tracking actual meals. So let's say you're traveling away on business. You can either take the cost of your meal at 50%, or you can look up what the IRS publishes as per diem options, where taxpayers can, the IRS has identified a standard daily rate of cost for these meals. But regardless of which method that you choose, that 50% limitation still applies. All right, so now that we've covered transportation and travel, let's connect this to something really important, and that's the expense for the business use of your home. Because I mentioned earlier, this can actually change how transportation is treated. So let's start here with the big rule. To deduct a home office, the space that you're using as your home office must be used exclusively for your business, and it must be used regularly for the business. Exclusive is a big one. That means the space is used only for business. So if you have a desk in your living room that you also use personally, that is not deductible. But if you have a dedicated office, that is going to qualify. And then regular in this context means that it's just used consistently. It's not something that you're using occasionally for your business. You are using it consistently. Now let's talk about how the deduction itself works. Home office deductions are reported on Form 8829, and they're based on the percentage of your home used for business. So typically calculated using square footage. Now we split expenses into two categories. We've got our direct expenses, and these are the costs only related to the office, and they are fully deductible. So for example, painting the office would be an expense directly related to just that space. And then you also have your categories of indirect expenses, and these apply to expenses incurred for the entire home. And it will be things like utilities, rent, insurance. And when we look at these indirect expenses, we are not going to take the full cost, the full amount of the expense. We're going to look at it based on a percentage of use. So let's say you have a home office. The size of your home office space represents 5% of the total square footage of your entire home. So when you're looking at your indirect expenses, you're going to take 5% of your utilities, 5% of your rent, 5% of your insurance when arriving at indirect expenses. Now, when it comes to limitations, there's a very important limitation for the home office deduction, and that is that it cannot create a loss. So your home office deduction is limited to business income. There's also an ordering rule for how expenses are applied. Expenses that are deductible anyway, so your mortgage interest and your property taxes, those expenses that we would deduct on Schedule A as itemized deductions. If we have a home office, we're going to split those among Schedule A for our itemized deductions, and then we're going to split a portion of them are going to be reported on Schedule C for our business expense. Those are going to be taken first. And then after that, the ordering is operating expenses. So things like your utilities and your insurance. And then after that, you would take expenses for depreciation. If there's not enough income to absorb all of these expenses, you would carry the excess expense forward. So there's a lot more in these sections of the chapter. I will leave that to you to read, but just kind of stepping back, in this video, we covered two major areas of business expenses, your transportation and travel. We covered commuting versus deductible transportation, mileage versus actual, travel rules and meal limitations. And we also covered business use of the home. And we said that that needed to be exclusive and regular use. We talked about how there's key limitations here with your business use of your home. So as you work through these the problems in your homework, focus on identifying the type of expense, applying the correct rules, and watching out for those limitations. In the next video, we'll continue building on business deductions as we move through the rest of the chapter. Thanks.